Intercompany sale of depreciable assets. Assume that on January 1st, 2019, a parent company acquired a 90% interest in a subsidiary's voting common stock. On the date of acquisition, the fair value of these subsidiaries' net assets equaled their reported book values. On January 1st, 2011, the subsidiary purchased a building for $484,000. The building has a useful life of 10 years and is depreciated on a straight-line basis with no salvage. On January 1st, 2013, the subsidiary sold the building to the parent for $420,000. The parent estimated that the building had an 8-year remaining useful life and no salvage value. The parent also uses the straight-line method of amortization. The parent's standalone net income is $500,000. The subsidiary's recorded net income is $110,000. And the question is asking, what is the consolidated building net of accumulated depreciation? And so really, in this problem, we have a whole lot more information than we need, because the consolidated building that's going to be reported is going to be as if the intercompany transaction never took place. So that means we can really just focus on the subsidiary and depreciate over the time from the end of this year, and that will give us the consolidated building. So it was originally purchased for $484,000 and over a life of 10 years. So we have annual depreciation of $48,400. And then on January 1st, it was sold to the parent, so it looks like 2 years have passed. And then, so I'm assuming that we're looking at the end of 2013, so really we need to account for 3 years of depreciation. So this is our accumulated depreciation over 3 years. And so that means the book value that would be reported as our consolidated building would be the original $484,000 minus the accumulated depreciation, and we get $338,800. And so I think the important thing to remember about this problem is that it's actually way more simple than it seems, because at the end of the day, the consolidated amount is as if that intercompany never happened. So we could go into the difference of the depreciation from the parent and the subsidiary, but we'll end up at the same $338,800, because the whole point of doing that is just to eliminate that intercompany sale ever happened. So we would get back to that same $338,800.